I teach 10 traders how to trade using the Anchored VWAP, and 7 of them started making money within the first 3 months. And I'm going to share here the experience, what made them the most money, and I hope this will help your trading out. First of all, we will start with the Anchored VWAP placement, and what made them the most money is always the money management. I'm going to show this to you first on a black screen, and then we're going on into trading examples, what they made using real money and also in the demo account in combination, and where we find these similarities based on these things. Because the one is that we buy or sell emotional, but the other one is on clear references, such as identifying using a 1-minute chart. If it's the S&P 500 is very important, because those are the 500 biggest American companies. Every 4 months, new companies are getting in, old companies are getting out. You have lots of references why the market is doing so much money each hour, especially at the US session. There's an RTH and there's an ETH. The RTH is called the real trading hour, and it is from 8:30 a.m. to 4 p.m. It depends on what time zone you are. Very important is just to understand that in this time zone, the market is aiming for bigger structure highs or bigger structure lows, or sometimes there are smaller structure highs and lows, what the market is aiming at. And the bigger structure you can see the market is aiming at, the better it is, of course, to trade, because the trend is our friend. You might have heard that once. It is always about like with how much leverage can I adjust that this is a $1,000, $2,000, $3,000 move to catch. And then it's the money management, how to adjust $100 using the Anchored VWAP as a very big help for a very tight stop placement that makes sense to make $500, $700, $800 within one single trade that works well, and maybe just $50, $300, $400 with a trade that works less well. So first of all, these 3-step methods is literally about first to understand that we have a bigger structure high, we have a bigger structure low, and we want to see what makes more sense where the market is going at. That means if we see that the market does more green than red candles, that we see that the market does more length up than length down, if we see that the market does more candles higher in total than, for example, from coming here from the bottom, and when we contract, when we make the chart small, number 4 is that we see that the market is closer to this high than to this low. That it makes with our experience trading the market, maybe you have market experience already for 2 weeks or 2 months or 5 years even, that you see just it makes more sense to you that the market goes to this reference than going down to that reference. If you see that, that's the first step at all. Then we're looking for a color switch, a red and a green candle, and we concentrate on the structure, on higher lows it's called. So first of all, if we have step number 1 clear, that means you understand that the market wants to for the bigger structure high. The second step is, can we see that the market is literally going up here? And while going up here, it is then to understand how big of retracements are we expecting. For this, we have the Anchored VWAP. In this case, we place the Anchored VWAP on the bigger structure low or on a medium structure low. And very important is just we will see then 2 kind of lines. It will cut in difference like here or there. And we just want to see what makes sense, that if the market comes back and starts to make green candles, it can be green candles in this circle here. It can be also green candles just in total here within this circle here. That when we see now a green candle, like a negative, that means a red candle, and then just a green candle that is tight enough. Sometimes it can be that starting here, the market starts here to make 4, 5, 6, 7 green candles and just like 2 red candles in between. But sometimes it can be just one single color switch, just a red and a green candle. And if the green candle is just small enough that we enter the trade after the green candle closes, using a demo account first, please, stop placement on the small green candle, and we leverage, we buy so much that to our stop placement, we would lose $100 in average. What happens is that when the market goes against us, we would lose $100 in average. But if the market goes in the same length in the other direction where we assume, then we make each time for each the same length $100. So until here, you can see here 100, 200, 300, 400. This could be a $500, $600, $700 trade until this high here. This is the thing with the money management. And this is what made the student the most money. I'm going to show you examples with the chart. So here you can see first of all that the market is going here within the bigger, this is step number one. We see that the market has here this high here, and we see here a low, as you see here from a bigger structure perspective. We see here also fresher lows as you see here and there, right? What the market is aiming at. And the trader first assumed that the market is going up here to this high. And this was the main reason why the trader placed here the anchored VWAP, had an anchor VWAP that was cutting in. You can see in this circle here that there are now lots of green candles. And then when having here now the green candle, check this out here. You see here now lots of green candles, like starting here, you see here just like a lot of red, just like 2 green in between. But starting here, you see green, red, green, green, red, green. That means starting here, you see a lot of green candles. Now, when adjusting $100 here, entry after the green candle closes, adjusting $100 here, or the next color switch, red, green, adjusting $100 here, you can see that this will be a $800, $900 trade just aiming for this smaller structure high. For this bigger structure high, if the market would reach it, that means this one could be a $1,500 trade even. And that's just the power of leverage and using the small candles. You can see how the market is just a bit wiggling around. And the trader was not taking this trade here because the trader didn't saw too much realistic. It was too much pressure for the trader here, how the market was here going down. But I think like these trades can be also beneficial. But then here the trader was seeing that it made sense for him that the market is going from this point, because here a lot of red candles, it's a bit structuring down, aiming for this low here. You can see how the trader was drawing in this low here, because this is here like a smaller or medium structure low here. And then while having here a lot of red candles, you can see how the trader was placing here the anchored VWAP on the highest point. We have now a line that is cutting in, and then the trader was trading above the anchored VWAP. This is something what's very important with the stop placement, because we have always 3 kind of situations with the anchored VWAP. When you have the anchored VWAP, sometimes the anchored VWAP, if this is here the anchored VWAP with the high, sometimes the market is going above it, sometimes on it, or like below it. And it's just to understand that the stop placement just should be above the anchored VWAP. Sometimes we can make it slightly below it if we see enough pressure, but if we trade above the anchored VWAP for trading down or below the anchored VWAP for trading up, this can be very beneficial. As you see, for example, here the trader, here you have the placed anchored VWAP on the left side. That means here on the left side is a placed anchored VWAP, and you can see here the stop placement would be here below the anchored VWAP. You can see the anchored VWAP was placed here. The stop placement is here above the anchored VWAP. Those can be very beneficial. It's not a must always, but it's just something what can help here a lot out. So you can see here now, very important, you can see here now this green and a red-ish candle, how the trader was entering the trade here, adjusted $100 within the red candle, and then just like a $500, $700 trade, this one was aiming here for this bigger structure low. Very important to understand is that until here, the trader was just reading that it has more red and green candles, a bit more length down-ish, like you can just see that the market is pressing down. Are these very high qualitative trades? I think these are harder trades. I'm going to show you different kind of market situations, and you'll see days where it's going to be way more easier. Here, for example, you can see here that the market is coming here now from a bigger structure down. This here was a smaller structure. You can see bigger structure was going higher. You can see here a bit here, a couple of red candles, but it's a bit mixed. And starting here, the trader was just assuming that the market is now aiming for this low here because it has less power going up. This is market experience, but it's also very important how the trader was trading here. Here, you can see more on the left side. It means instead of the current last 20, 15, or 30 candles, it was more about the day. You can see here that here are more red and green candles, and because of this pressure, the trader was, even though we have here more green candles, here this color switch. Sometimes we can see more pressure in this area, and sometimes we can see it in the bigger structure area, and it's more to have market experience to understand what makes more sense. The bigger structure is always more stronger than the smaller structure, but it's of course to understand if you just trade for 1 or 2 hours, maybe 3 times or 5 times a week. It's just very important to understand where do we expect the market is going in the next 30, 45 minutes where we trade, and then just to adapt with that situation by seeing it recurring like over and over again. It's like building a relationship to the market. So you can see how the trader placed here the anchored VWAP on the highest point here, has here a line that is cutting in here with the market, because also trying out here these different kind of highs and you will find 3 different kind of lines then in 3 different kind of angles, and you see that this one made the most sense. There was then a color switch, and then the trader adjusted $100 within this color switch and made in this case $560, adjusting $100, trading until this low. Usually it is very important that step number 1 is always to aim for a specific high or low or a consolidation phase, what we're going through, what I'm going also to show you here as an example. Once the market touched our reference already, this is where it's getting harder and harder to trade. So what is very important is to understand that if the market touched the reference, in this case, this here was a 1-day VWAP, if the market touched our reference already, it is to understand, can we still see enough pressure here or there that it makes sense that the market still goes here to the 1-day VWAP or to a specific low, as you see here, that is fresh, or a bit more older to the left side. So the thing is now, when you see it makes sense, then I think this trade here is good because you see a lot of red candles, lots of pressure, more length down than length up here. Check this out. It does really a lot of pressure down. The length up is just like from here to there. This is the length up, right? Like it cannot reach too much up because there's still a lot of pressure, and we can actually assume that it still continues here, especially touching the anchored VWAP, or just like while the market is going back. And that's why I think this trade is very good. But at the time when the market touched already a reference such as a 1-day VWAP or like a specific reference such as a high, low, or a consolidation phase, what we will go through, it's just like the market will go in a consolidation phase and has less trade quality. You can see afterwards also the market was going down just a bit, and then now it was pushing up, and then now the trader tried to sell here or was selling here and just had a losing trade while there were a lot of green candles, right? It's more near to this high, the market, than this low. So actually it makes more sense that the market wants to go to this high. So I think buying here makes more sense than selling. But keep in mind here a bit, the market is more flat, like in the middle. And before, the market was really pushy in one direction. And this is where I think it's the most profitable, what I see with these trading students. So next one, you can see here also again here a bit of a flat day. Here we have a consolidation phase here on the left. That's what I mean. Either it's going to be a high. That means here you can see a high. It's going to be a low that the market is aiming at. That means up here, down there. Or it's going to be a consolidation phase itself. In this case, if the market is in a smaller consolidation phase, more tight, as you see here, inside trading, I think is not good. This is where lots of losing trade occurs. It's more like to see that the market is pushing away, identifying, is the market going here to this orange line for, as an example, or like to a low here that you have on the left side? Or can you see that the market, as you see here, and starting here, the market starts to make more green than red candles. The market is rotating higher. And you can see that it makes then more sense that the market goes to this consolidation phase here. On the left side, because the trader placed a couple of anchored VWAPs or having here the 1-day VWAP, you can see how the line is cutting from bottom to top up. That means on the very bigger structure, the market was going higher. That means now when aiming for a consolidation phase, usually the market is also hitting here this bigger structure high. So we don't actually need to draw in the consolidation phase. It's just like these highs, as you see here, what makes the most sense. This is also what the trader did. And when we see that the market is going from top to bottom, for example, like this, and then we have here the consolidation phase, usually the market is just going in this consolidation phase here inside and then just turning around and just wiggling around, and then the move is already finished. It's very important to trade always where we have the most push. In this case, it was with the biggest structure. In this case, we see here a lot of green candles. We see the market does more move up than move down. And then what the trader did here, he took a small color switch, such as a red and a green candle, as you see here, adjusting $100. This is like a $700 trade until here. This is like a $700 trade, as you see here. And until up here would be like a $1,400, $1,200 trade in this case. So you see, leverage and money management is just one of the most important things. The trader also lost here one time $100 and then adjusted $100 again. And this time you see here how the trader used the anchored VWAP only on the second trade properly, with the stop placement below this blue line that you see here, and where the trader was, it just makes more sense by less getting stopped out. On the first trade, the trader didn't use the anchored VWAP and was getting stopped out. And using the anchored VWAP by seeing lots of green candles, as you see here, you find here more green than red candles, can be just very beneficial. Of course, it's very important to also not just to see green candles up here and then enter the trade. while being near the anchored VWAP. You can see in this case here where I put a small circle, here are more green candles, then a couple of red candles are coming in and just one color switch. But if you count the last 10, 15 candles, there are more green here. And just because here are 3, 4 red candles, I think it's about to ignore it a bit. If you can see that it makes sense with the experience that the market is structuring higher. And there's also something like a bigger higher low, as you see from here to there and here to there, it structures always higher, right? Next picture example, you see here again also how the market is just wiggling around here. This is something what is dangerous to trade. You find here a consolidation phase, you find here just consolidation phase, right? You find less moves. If you just compare this day to this day, for example, or this day, it is more clear how the market is here structuring down. Starting here, it's also nasty. It's not that nice to trade, but here you see how clearly the market was going down. Here you see how clearly the market is shooting up to this consolidation phase. And here you can see it's just like here from here to there that the market is going down, and that's it already. Here you see exactly what I was talking about, that the market was shooting with bigger structure higher. And this is the main reason why we can expect that the market is not reaching this target here. This is the main reason why we use this consolidation phase. And then when we trade, as you see here, adjusting $100, aiming for this consolidation phase, exiting our trade, and that's it. What the trader did is the trader entered the trade down here, but it was against the pressure. And as I just said, it is usually, the market is usually turning around exactly in this area, what the market also did, what made this trade also bad. This is something what is very important. I would recommend you actually watching this again and then just taking notes to that, because it's always about bigger structure, trading with the bigger trend. That means aiming that the market will aim for bigger structure high, medium structure highs and lows. But if it's against pressure, as you see, for example, here, pressure down, this is the high that the market cannot reach. So we use here the consolidation phase that the market reached. This is the reason why this trade is then good trading up here. The other thing is that we can see here pressure up, and then the trader trades down here, and then until this consolidation phase makes more sense than aiming for this low here. Next one is we have here again here trending day. This is pretty nice. And here you can see in this case, the trader started trading here. You find here lots of red candles, and the trader, because he's in this beginning, he was exiting here to trade. It is important that you understand that if you have bias, clear bias such as more red than green candles, a clear target you're aiming at to trade at, that means in this case to this low here on the left side. This is a low somewhere we cannot see in this picture, or you have here this low here in this case here. If you have a clear target you're aiming at and you can see more red than green candles, you can see that the market has more length down than length up, then you may be more confident in taking the second trade and letting also the trade more run step by step by seeing afterward that these trades make more sense. You can see how this trader here adjusted $100 within a small color switch, was losing 100, but then the next color switch adjusted $100. This was he was exiting with like $100, $200, but this would have been a $700, $1,500 trade, trading down to either one of these reference, either here around 300, around here, 700, 800, or $1,200 until aiming to this reference from a low to the left side. So money management is one of the most important things, but also where it makes most sense by trading with enough momentum. There are scenarios where you will see that the market had here a lot of candles, and you may expect that the market is going maybe up here to this high for any reason. The trader saw until here that the market did more length up than down, that it did higher lows with structure. That means just like within the structure, you can see like that market was going up here. And then here, the market did lots of green candles. So adjusting here $100 to aim for a $700 trade, I think it's totally fine. Usually we try to look at losing trades, how to cap them, how to have less losing trades. But I think if the trade has these things, criteria that I just said, lots of green candles, a clear target where the market is aiming at, adjusted $100 to aim for $500, $800, using first a demo account and not real money account, then I think like it's totally fine to have 10 more, 5 more losing trades. It's totally fine by finding just this one winner trade to make $400, $700, $800, or sometimes even more when the market is pushy enough. So here we see another day. So as you see here, we try to trade at harder days. Then here's a more clear day, how the market is rushing down. More red and green candles, a clear target. The trader was actually assuming the whole time that the market is going here to this reference here, down here, by the way. And you can see how the trader placed the first trade. This is a good losing trade because you find here more red and green candles, a green and a red candle, and the anchor we were placed here or there. You can see how it cuts then here inside. It's totally fine. And then you find here how the trader placed now the second trade was here. You find here lots of red candles in this circle. The trader placed here the anchored VWAP. He was trying out different anchored VWAPs here and there. Which line of this cuts in better? You find here line 1 is like this, line 2 is like this, right? So the trader figured out that line 2 was more nicer, and this was the main reason why he took this anchored VWAP, was very nice. Now, as I told you in the beginning, sometimes there's an anchored VWAP, the candle, the color switch below the anchored VWAP, sometimes above or sometimes at it. And you can see here how clearly the trader had a stop placement above or at the anchored VWAP. If the market would tend to go down because we see a lot of red candles, we can assume that the market continues to go down. Also, to take as a side note, the last 2, 4, 6 candles here had a specific length from here to here going down. Now check this out. We can assume now that the double amount of candles do the same length. That means from here to there, you find here that the market did this length. I'm going to draw this to your inside. Check this out. From here to there. And then now the double amount of time goes from here. So you see now in the double amount of time, the market did this length here. So it was around 60% of this length. In the triple amount of time, check this out. Triple and then quarter. So it takes 4 times the time. That's actually pretty weak. Usually if you see that within just like one time, within like 10 minutes, usually it takes 20 minutes to make the same length on the lowest part. But in this case, the market did a retracement. Check this out here. The market did this length here within like 4 minutes, came back, and then it did here the same length again. In total was also around the double amount of time. But what I just really love with reading when seeing here red candles for trade management, it can help. And seeing here 4 candles, to assume that 8 candles, 16 candles, 20 candles, just the next 35 to 45 minutes when we trade, we can assume the market is going by 50% the same, either the same length or 50% just lower. And you can see the market did 50% lower and the same length here within 1 hour here, down here to the right? So, or 30 minutes around this. So you can see how the trader placed here the anchored VWAP. You can see how the trader entered the trade, stop placement on the anchored VWAP, and adjusted $100. This is like a $450, $500-ish trade, aiming for this bigger structure low. You cannot see this bigger structure low here on the picture, but what you can see here is this blue line, and the blue lines are coming just from lows. Lows are just like, look, you can see how the market goes like that, and this is just what the low is. And you see here obviously more how the market is going down. So the trader made here $400, $500. The market continues to go down, places the anchored VWAP here where my mouse is. And now check this out. The trader had here the green and a red candle, adjusted $100. This was a $500, $700 trade down here. Again, looking to the left, we have here again a bigger structure low. So as you see here, there are days that are more easier to read and trade. There are days that are more hard. And it's about to concentrate on those days that look more nicer. For example, at those days, this is in a big consolidation or contraction phase. This is exactly where a lot of losing trades occur, and you can save yourself 5, 10, 20 trades a month. And I think like instead of having these 5, 10, 20 losing trades a month, I think it's better to have these winning trades and just to concentrate more on these trendy days. Also, I need to say that the risk reward ratio is so important that we don't need to concentrate. I need to say it again, not too much on these. We don't need to concentrate too much on losing trades, because you can see your trader how he has 15 losing trades and 8 winning trades. The 8 winning trades made him $4,350, but the 15 losing trades, he just lost $1,500. That means he made $2,850. He could have 10 or 20 more losing trades and still make almost $1,000. And this is just something I hope you can learn something out of this video, is that we don't concentrate too much on losing trades, how to prevent them if they have these criteria, lots of green candles. We can see a clear goal where the market is going at, and we take a color switch, and we rather have there 5 more or 7 more losing trades, but we just need 1 or 2 single trades that are working well. Here example, you see it again, market is structuring up, bigger structure is also structuring up. You see how the green candle adjusted $100. This is a $500 trade, aiming for the bigger structure high on the left side, looks like that. And what just worked well. Sometimes we get stopped out. We need to use the second trade as something what's very important. And that's how it goes. Here you have, at last, I prepared 2 pictures from 2 different kind of traders trading at the same day. And I just need to look forward. Are these the same day? Yeah, these look like the same day, right? Yeah, so you can see here how the trader number 1 was trading very aggressively down here. Sees a lot of green candles. The market is more near to this high than to this low here, right? The market showed us already that it didn't touch this high, and it shows us it does higher lows. That means from a structure perspective, you can see how it structures like this, just higher. So that made more sense for the trader, especially starting here. Lots of green candles, more length up than down, that the market will reach this high here. What the trader did is the trader saw the opportunity to have a very tight green candle, adjusted $100, lost it, did a re-entry. He entered the trade in this open candle again once the market was going up again with the tight stop placement, and made $500, $700 until here. And this is just something very important to understand, that when adjusting $100 and aiming for a reference, if this would be $1,400, I think it's first more important to exit at $500 in average, $400 to $700, $800, because it is about the mathematical thing that when I'm adjusting $100, I'm exiting full with $500 and not just with 50% of my position size. And if I want to continue trade in that direction, then I'm using just $100 2 times or just 1 time to try to make again $500. Because when making here $100, when adjusting $100 to make $500, you will lose more than $100 in your trade management if you want to aim for bigger structure highs, and if it's not a fresh push within the first 15, 35 minutes. And for that, I think it is more efficient just to adjust the $100, make the $400 to $700, and then just to use again, as you can see how the trader did, adjusted $100, lost $100, and the trader was finished for $400 or $600 for the day. On the other side here, you see how the other trader was trading it, and it worked out. The trader was adjusting here $100, made $700, also small candle. The trader here adjusted $100, and then you can see how the trader made again $700. And again adjusted $100 to make again $700, around $700, $900-ish. Here adjusted $100 as you see here with the trade. And this is just the money management, what is coming first. But you can see here also how important it is to use the anchored VWAP and to have the stop placement below.